Hello everyone, I'm Edmund Shing. This is the latest video entry for my blog The Idle Investor. Today is the 4th of July, which of course is the American Day of Independence, so guess what? The US stock markets are closed. Nevertheless, we saw rather surprisingly strong performance from European stock markets today, thanks to central banks, of course, both the Bank of England and the European Central Bank, both Governor Mark Carney and President Mario Draghi, both, I think, gave rather strong support to the notion that rates will remain very low for even longer than expected, and they may even have to go yet further in trying to support the European economy. What does this mean for stock markets? Well, clearly the reaction today was extremely positive, both in the UK and also in the rest of Europe, judging by the FTSE 100 or the Euro Stoxx 50 stock indices. I would expect a positive follow-through, of course, as well from other stock markets tomorrow, notably the US and Asia. But the real question remains, is this upwards momentum going to be enough to exceed the previous highs that we saw touched back in the middle of May? I remain somewhat suspicious that this will be the case. And while I remain long of European equities for now, I will progressively, personally, be taking profits over the next few weeks. Why? Because I think there is a good chance we will continue to approach the peak levels that we saw in the middle of May. I'm far less sure that either the economic momentum or the profit momentum are strong enough to allow stock markets in Europe to exceed these previous highs. And I think there is some cause for concern already showing in the number of sectors, notably in banks, in the oil and gas sector, and of course in the mining sector. These three are all already looking rather weak, and there is always the risk that European stock markets like the Euro Stoxx 50 or even the French CAC 40 could top out and actually ease back over the summer. Remember, seasonally speaking, the summer is not generally a very good period for equity market performance. Usually November to April is your prime period for performance, and of course the period from June to October tends to be much more disappointing on average. So there is that seasonal effect, which is somewhat negative to take into account as well. So for now, I suggest you stay long European stocks, and in particular favour small caps. However, I think that there will be a time to take profits, and that time may come relatively soon, where you'll want to dial down your risk exposure to stock markets for the rest of the summer. I'll keep you updated on when I think that happens. This is Edmund Shing, and thanks for watching, and hope to see you again soon.